Grayscale's Near Trust is trading 42% above spot. The fund holds barely $1.3 million in assets. So why are sophisticated buyers paying that kind of premium for a token they could buy on any major exchange? That's the question I want to answer today. This isn't just about near price action. This is about a setup the broader market is mispricing in real time. Two of my take profit zones already hit. The third is in sight. And the entire macro structure of Near just changed. Let me show you what I'm seeing. This is my 10th video on Near Protocol. I'm not posting again to chase a narrative. I'm posting because the chart just confirms something I've been positioned for since prices were between 85 cents and $1.20 in the lower green box on screen. The sentiment around Near is still mixed. Most of crypto is busy chasing AI tickers and ignoring the fact that Near is quietly building one of the strongest fee-generating engines in the entire Layer 1 space. That disconnect between price and product traction is the kind of gap institutional money hunts for. Today we walk through both sides, the fundamentals nobody covered, and the chart structure most analysts missed. On May 22nd, Near Protocol shipped confidential payments through Near.com. Alex Shevchenko sent 0.1 ETH to the Ethereum Foundation directly from his Near balance. The chain didn't see who sent what, but the buried data point is what matters. The payment was sourced in Near. Every confidential cross-chain transfer requires Near consumption at the routing layer. That's a demand pump. Now let me zoom out. Confidential swaps have been live on Near.com since March 31st. By late May, they captured 41% of total swap volume on the platform, $87 million in confidential volume against $122 million in public. That ratio is product-market fit velocity. Privacy is becoming the default user experience. The confidential intense total value lock chart is the real alpha. From $0 to $15 million in 3 months. No incentive emissions backing the curve. Compare that to the privacy basket around it. Zcash is up 163% in 90 days. Venice AI is up 368%. Near is up 178%. Near is the only asset in that cluster with $3 billion in market cap, a pending exchange-traded fund, and real fee revenue. Near is also running private AI inference in production. Through Venice, users get hardware-attested model outputs verified in 343 milliseconds. 6 cryptographic checks every time. Now look at the agent flow. On May 22nd, Near processed 1,100,000 transactions in a single day. A new monthly activity record. AI agents running on-chain 24/7. Every transaction routes a fee. Near Intense now has 542,000 paying users in the last 30 days. 500,000 people paying real money to use the product. Cumulative swap volume sits at $19 billion. 25 million swaps executed. $33 million in protocol fees generated. And those fees route directly into Near buybacks. This is where institutional capital shows up. Grayscale's Near Trust trades 42% above spot. Assets under management moved from 790,000 to 1.3 million in a month. Grayscale already filed to convert the trust into a spot exchange-traded fund. The Securities and Exchange Commission decision lands around September. Trust, premium, ETF conversion. We've seen this movie. It was called GBTC. The setup ended with Bitcoin at a fresh all-time high. Compare Near to BitTensor. Same 3 billion market cap. Near generates roughly 12 times more in fees. That's the structural mispricing my position is leaning into. Here's the part most Near bulls won't mention. Token Terminal ranks Near 8th in Layer 1 revenue at $5 million over the last year. The chain still runs $64 million in annual validator emissions. Net earnings come in at negative $59 million. The buyback loop is real, but undersized. Near has to roughly double intense fees to flip net deflationary. The actual bull thesis is a math problem with a deadline. Every catalyst on this list pulls that deadline forward. Now let me pull up the weekly chart on screen. Near has been trapped inside a descending channel since late 2024. Those are the orange dotted lines. For 16 months, every rally was sold into the upper trend line. Every dip held the lower one. Last week, we broke out cleanly. The first take profit zone activated at $1.70. That level is the 1618 Fibonacci extension off the August 2024 to December 2024 impulse. 2 days ago, price tagged the second target at $3. That's the 1 fib level. It's also where the 200 simple moving average sits, the green line on the chart. Same level acted as resistance throughout 2025. Market makers have been defending it for over a year. Price is currently around $2.50, trading above the 21 and 55 exponential moving averages in red and purple, but still below the 200 simple moving average. That last one is the line that decides macro trend. A weekly close above it flips the structure from bearish to bullish for the first time since 2024. The Heikin-Ashi Relative Strength Index on the bottom of the chart is reading deep into overbought territory on the weekly. The obvious money is already priced in. New entries here are chasing. I want to be transparent. The best risk-adjusted accumulation window was the lower green box between 85 cents and $1.20. I've got multiple videos on this channel calling that zone in real time. Viewers who acted there are sitting on triple-digit gains. For anyone out of position now, the second green box on the chart shows my preferred re-entry zone between $1.70 and $2.30. With Heikin-Ashi RSI this hot, I would wait for a pullback. The cleanest setups are a retest of the 55 exponential moving average, or a deeper retest of the 1618 Fibonacci level around 160. Conservative entries can use the 4-hour or 1-day Heikin-Ashi RSI oversold reading as confirmation. My invalidation zone is a weekly candle close below $1.40. Not a wick, a full candle close. That red dashed line on the chart is where the entire breakout structure fails. If we close below it weekly, the descending channel reasserts, and price likely revisits the deeper liquidity below. My current execution. I'm not strategically accumulating here. The risk-adjusted entry zone is gone. I've moved my invalidation higher on a large portion of my position to protect the move already locked in. I'm still holding a core bag for the long-term targets. My trailing logic is simple. First target hit, stop moves to entry. Second target hit, stop moves to the first target. And so on up the chart. Synthesis time. The bull case has 4 legs. Privacy adoption accelerating. Near AI in production. 542,000 paying users routing fees into buybacks. And the Grayscale ETF decision in September. Targets above current price are the green circles on the chart. $4.50 for the 0618 fib. $5.70 for the 0382. $8 at the prior swing high. $11. And $17 for cycle extensions. The bear case is one number. 64.8 million in annual emissions still outweighs 33.5 million in protocol fees. If confidential intent's total value locked growth flattens before fees double, the real yield narrative reverts to subsidized growth with extra steps. My probability lean is bullish on a 6 to 12-month horizon. The catalyst calendar is loaded. The technical structure just confirmed. But the path won't be vertical. Expect chop. Expect retests. Position size for both outcomes. So, look. Near Protocol broke a 16-month descending channel. Confidential infrastructure is live and capturing real volume. Grayscale and the pending ETF add an institutional bid the market hasn't fully priced in yet. My position stays open. My stops trail higher with every target. My targets remain clear. If this analysis brought value, hit the like button and subscribe. It helps the algorithm push the work to other serious investors. For viewers ready to see the exact percentage sizing, the real-time portfolio tracking, the Sunday prep reports, and the weekly live strategy calls, the Pro Capital Vault on Discord is where the deeper execution happens. Join button is below the video. Link is in the pinned comment, the description, and the QR code on screen. Once you're in, sync your YouTube account to Discord and the private channels unlock automatically. Before you leave, check my previous Near Protocol breakdown on the channel. It walks through the full thesis history that got us to this moment. Nothing here is financial advice. The chart shows what's possible. Your risk management decides what's profitable. Position accordingly.